Take out any money near you right now. Rupees, pesos, naira, euros. It doesn't matter. Whatever currency is in your hand, its value is quietly being shaped by a currency you might not even own. The US dollar. In the next few minutes, you'll understand exactly how a decision made in Washington can change the price of petrol, food, and rent in your city. Here's the simple truth. The US dollar is not just America's money, it works like the world's middleman. When countries trade with each other, when banks move money across borders, and when governments store their savings, most of the time, they use dollars, even when America is not involved in the deal at all. The numbers are honestly shocking. According to IMF data, about 57% of all money that central banks keep in reserve is held in US dollars. Around half of global trade is priced in dollars. And in the giant market where currencies are exchanged, the dollar appears in roughly 88% of all trades. No other currency comes close. So how did one currency take over the world? The story starts in 1944, near the end of World War II. Leaders from 44 countries met in a small American town called Bretton Woods. The world's economies were destroyed by war, except America's. So they made a deal. Everyone's currency would be linked to the dollar, and the dollar would be linked to gold. That system worked for almost 30 years. Then in 1971, President Nixon ended the link between the dollar and gold. From that day, the dollar was backed by nothing physical, only by trust in the American economy. Many people expected the dollar to lose its power. Instead, something surprising happened. It became even more important. One big reason was oil. For decades, the world's most important resource has been priced mostly in US dollars. If a country wants to buy oil, it usually needs dollars first. That created permanent global demand for the dollar. On top of that, countries park their savings in US government bonds, which are seen as one of the safest places to store money. Demand for dollars became built into the system. Okay, but how does this reach your wallet? Let's start with the most direct route: imports. Things like fuel, electronics, medicines, and machines are usually bought from other countries using dollars. So your country first has to buy dollars, then use those dollars to buy the goods. Now imagine your local currency gets weaker against the dollar. Suddenly, every barrel of oil costs more in your money, even if the oil price itself never changed. Petrol becomes more expensive. Transport becomes more expensive. And because almost everything travels by truck, even vegetables in your local market can become more expensive. That is the dollar reaching directly into your wallet. The second route is interest rates. America's central bank is called the Federal Reserve, or the Fed. When the Fed raises interest rates, keeping money in America suddenly pays better. So global investors pull their money out of other countries and move it into the US. That makes the dollar stronger and many other currencies weaker. The third route is debt. Many governments and big companies around the world borrow money in dollars. When the dollar gets stronger, those debts become heavier to repay in local currency, even though the loan amount never changed. Governments may then raise taxes, cut spending, or print money. All three of those can end up costing ordinary people. Put it all together, and you get something economists call imported inflation. Your salary is paid in local currency, but the global system behind your fuel, your phone, and parts of your food bill runs on dollars. When the dollar moves, prices around you can move, and your salary quietly buys a little less. You never touched a dollar, but the dollar touched you. Will this ever change? Some countries are actively trying to depend less on the dollar, a trend called de-dollarization. But the numbers show change is slow. The euro holds about 20% of global reserves. China's yuan holds only around 2%. The dollar's share has slowly declined over the decades, but for now, it is still the heavyweight champion by a huge margin. So what does this mean for you? You don't need to do anything special. But now when you see a headline like "The Fed raises interest rates" or "Local currency hits record low against the dollar," you'll know it's not just boring financial news. It's an early signal about fuel prices, shop prices, and the real value of your salary. That's how a currency most people never hold ended up controlling wallets in every country on Earth. This video is for education only. It is not financial or investment advice. If this helped you see the news differently, subscribe to Wealth Atlas. Next time, Why some countries print money and destroy their own savings. See you there.